Yeah, sorry guys, I forgot to turn on the recording. So welcome everyone. Let's just start the session right now. Welcome everyone, Marcel here. And yeah, we were talking about cryptos and stocks and the world economic crisis right now. But let's just stick to the Euro USD chart and let's just stick to the educational topics. So we don't care about the world economic crisis. We just care about to make money on Euro USD. And first of all, before we analyze the 4-hour chart and the higher time frames and the lower time frames, as usual, there will be an educational topic, which will be a buy to sell candle and sell to buy candle in this webinar, because I believe it's really important for you to understand that how buy to sell candles are working, because I showed you already in a recap video that how to actually determine buy to sell candles and what are buy to sell candles or sell to buy candles. But I believe you don't know how to use these candles. We don't use it regularly, so we don't really care about these candles. These are just footprints of price actually. So these are expectational reversal, not reversal points, but continuation points. So let me just show you an example. What is a buy to sell candle? For example, if you're looking at the 1-minute chart, or let's just stick to the 15-minute chart first, there will be an upside candle with a huge wick. This will be an upside candle. Let me just change this wick to a line, upside candle. And the next candle will look like this, something like this. And it doesn't really matter the high, where is the high point. We only care about the wick on the low. So this will be the buy to sell candle. Literally, this is a buy to sell candle. It looks like just a continuation, right? So it just looks like the price is continuously going up with direction movements, but the devil is in the wicks actually. So we have to care about the wicks, because this is the purpose of buy to sell candles on the 15-minute chart. So this will be the 15-minute buy to sell candle. On the 15-minute chart, this will look like this. But on the 1-minute chart, just think about it. This candle on the 1-minute chart will look like this. This pullback, this wick and this wick will look like this on the 1-minute chart. So it will be a hidden demand zone on the 1-minute chart, and the continuation will happen. So this is how the 15-minute chart looks like. Just two inefficient candles straight up to the upside. But on the 1-minute chart, it will look like this, because this small candle, and I mean wick, and this small wick on the 15-minute chart will look like an actual pullback on the 1-minute chart. And if a pullback happens on the 1-minute chart, that means that there will be a demand zone, right? Because a 1-minute pullback happens right here, there will be a breakout structure, there will be another breakout structure with another dimension push. And if this happens, there will be a 1-minute demand zone on the 1-minute chart that will be a buy to sell candle on the 15-minute chart. Let me just remove this and put it a bit further. So this will be the demand zone on the 15-minute chart, which will be equal to the 1-minute chart demand zone. Do you understand this, how this works, and what can you expect on this? Let me just explain you. So basically, buy to sell candle will be that candle or those candles which has a high candle, I mean high wick right here, which is going to the upside. Candle closes right here. The next candle opens at the same level where the candle closed. So the close of this candle and the open of this candle is at the exact same line. And the wick, the high wick of this first candle is above of the closing line. And the wick of the downside wick of the second candle is below of the closing line. So there will be a closing line. There will be a closing line. The first candle's wick have to go above the closing line. The second candle's wick have to go below the closing line. And this will be a buy to sell candle, because price is coming up, wicking above, creating a pullback, continuation. And there will be a hidden demand zone right here. So this is a 1-minute demand zone. If you're looking at the 15-minute chart, this won't be a strong demand zone. This won't be a strong demand zone, because this is not a 15-minute demand zone. Somewhere around here, there will be a 15-minute demand zone, and somewhere around here, there will be a 15-minute demand zone. And this will be just a random 1-minute demand zone, meaning 15-minute buy to sell candle. So technically, this is a 1-minute demand zone and not a 15-minute demand zone, but there's still a chance that price will give a reaction on this zone as soon as it turns down. So for example, there's the extreme zone. How can you actually use this demand zone, this buy to sell demand zone, to your advantage? If price reverses, for example, after a breakout structure right here to the upside, price reverses, and there will be this buy to sell candle. If price taps this buy to sell candle and creates a 1-minute change of character inside of this candle, that will be good to go. You can go long when this opportunity happens, but this happens really rarely. So more likely these buy to sell candles are being broken, because basically this is at the premium range of this whole candle, and price more likely will come down to mitigate this 15-minute demand zone. But how can we use this buy to sell candle to an advantage when it's being broken? Simply, just like any other demand zone, if price gives a reaction on this zone and breaks below it, there will be a flip zone, and you'll be able to take a short continuation down to this 15-minute extreme demand zone, because there will be a higher time frame tap. This will be a higher time frame tap. This will be a confirmation that price has decided its final direction. So you won't just happen after a 1-minute change of character happens here. So for example, price changes character here on the 1-minute chart. So you won't be happening in the trade right here. You're just waiting for a confirmation on this buy to sell candle. And if this confirmation happens, so the buy to sell candle is being broken, you're just happening in a continuation trade. Does this make sense yet? Is it understandable yet?
Yes.
Just circle it, please. Sorry, I'm just eating a bit. Okay. So, but this could be on the 1-minute chart too, because if this buy to sell candle is on the 1-minute chart, so for example, the 1-minute chart looks like this, and then the 15-minute, not 15 minutes, sorry, the 15 seconds or the 5 seconds will look like this, more likely the 5 seconds. The 5 seconds will have a pullback just like on the 15-minute to the 1-minute, then the 1-minute to the 5 seconds will look like this. But these zones, these 5-second zones, these 5-second demand zones, this is the 5-second, let me just write it right here. So this is the 5-second zone. These 5-second zones, these 5-second buy to sell candles, 1-minute buy to sell candles are really weak. So we can't really expect the continuation on these candles, can't really expect the change of character or anything like this, because these will be broken sooner or later because these are weak. But if the same happens on the 15-minute chart, so it's not a 1-minute chart, this is not a 1-minute chart, it's a 15-minute chart, and this is a 15-minute buy to sell candle on 1-minute demand zone, this could work. This scenario could work. But if this is on the 1-minute chart and this is on the 5-second chart, this can't really work because the 5-second isn't strong enough. The 15-minute and 1-minute is strong enough to reverse price, but the 1-minute/5 seconds is not strong enough. So yeah, the same goes on for the sell to buy candles, just on the other side. So basically the sell to buy candles are down continuations. Okay. So it's the exact same thing, just on the downside, on the short side. Because as you can see, the closing line of this candle and the opening line of this candle is at the exact same line. So there's the line. Let me just write it like this. There's the line. And the downside wick of this candle has to close below the closing line. I mean, it's pretty obvious that it will close below it because that's the closing line. And if it wicks below it, then of course it will be below it. But it has a wick below the closing line. And the second candle's upside wick has to go above the closing line. So this will be a sell to buy candle, basically the same as the buy to sell candle, just on the other side. So it works like the same, just like the buy to sell candles. This will be a supply zone, hidden supply zone. And if this is the 15-minute chart, then the 1-minute chart will look like this pullback, and there will be the same supply zone on the 1-minute chart. And you can expect a reaction on this candle, and you can expect the break of this candle and continuation of this candle. So yeah, basically that's how you can use the buy to sell candles. And one more important thing, that you can use these for change of characters. So for example, if there's I like the buy to sell more. So if there's a demand zone right here, and if price breaks below this buy to sell candle, then this will be a change of character right here. So you can count it as a change of character, but this will be a weak change of character. So this is a change of character, but a weak change of character, not a strong change of character. If you need further confirmation, you can wait for a strong change of character, because these are really big change of characters, but this counts as a change of character. Okay. So once again, this is how you can use the buy to sell candles. I'm not really regularly using these because these are more likely to be broken than to hold price. So you can just count a change of character on any kind of mitigation or any kind of continuation on these candles. So basically these are confirmation candles where you can expect a confirmation. But as I said, I'm not really using these candles because these are useless, and I'm more likely marking out my extreme points and valuable 15-minute zones, valuable 1-minute zones, and not just like these random decisional buy to sell candles. So that's all about the buy to sell candles. Is it understandable? I believe it doesn't really require more education, doesn't really require more explanation. Yeah, that's what's said, but he said they usually get broken. We will be focusing 15 minutes byte to second and wait for one. Yeah. If there's a 15-minute byte to second, we wait for a 1 minute confirmation. So if there's a 15-minute zone, that 15-minute byte to second, we wait for a 1 minute confirmation on this zone, not a 15-minute confirmation. And before we continue with the analysis, let me just drink a few sips and eat some more. Please don't just keep them a company.
Okay, cool. So guys, I saw many of you forcing long trades these days, and I just would like to say you that be more patient, please, because price is extremely bearish, and don't force the counter trend trades and something like that. It's useless, and it will give you a lot of more unnecessary losses. So you can avoid this. Don't chase price, don't chase longs, don't chase counter trend, that just go with the flow, follow the trend, and everything will be fine.
Yeah, exactly. Why would you trade against the order flow? The most important thing when you actually start trading, when you actually start your analysis, is to find the order flow. That's why I always say, right? Create a plan. By creating a plan, you're creating an expectation order flow for yourself. If you're creating a plan, a narrative before sessions, you will follow that expectation order flow. And by determining, how can I say this word? Determining by determining the actual expectation order flow for yourself before the session starts, you'll trade with that order flow. You will trade with the expectation order flow and not against the expectation order flow, right? So just please guys, trade with the order flow and trade with the trend, not against the trend. Because if you're trading against the trend, if you're trading counter trend trades, you're more likely to get your stop loss hit and not your TP. So yeah, it's really, really important. But we are creating these narratives every single webinar and basically in the markups too. So I just create a narrative once again in this session too. What will be considered the right length of the wicks only? It doesn't really matter. There's no rule for this because I'm not really using these buy to sell candles. I didn't really make a rule for this. So any kind of length will be good, I believe. Yeah, and I'm not really teaching this. That's why it's not in the video course, because I'm not really using and I'm not really teaching this because these are useless things. I don't really have to use the buy to sell candles because I backtested them a lot. And it doesn't really matter if there's a buy to sell candle. Those candles may be more likely broken, and you can't really rely on those buy to sell candles. And yeah, rather use the normal supply demand zones, rather use the normal decision or extreme zones. Those are much better. You don't have to force these buy to sell candles too. That's why I'm not teaching these. But I saw that lots of you guys were confused about the buy to sell candles because in one single scenario, in this almost a year, I'm teaching you for like almost a year. So in one single scenario, I used the buy to sell candle, and all of you were confused, like, oh my God, flipping, why did you use the buy to sell candle? Oh my God, I don't know this. Oh my God. Chill. If I use this only one time, you don't have to care about it. But of course, I'm explaining it to you because if you're confused, I'm going to explain things for you. But you don't have to pay that much attention to these buy to sell candles, sell to buy candles, because they are useless. I'm not really using them, and you should neither. So yeah, let's just start the.
Yeah, and guys, aim for confirmations mostly. Strong confirmations. That's the key.
Okay. Let me just ask you guys, what should we do before starting every single session? What do you have to do before starting a session?
News. Checking the news.
Exactly. We have to check the news. How can I hide this from here actually? Can you see my Zoom somewhere around here at the top region of my screen? Where it says like mute, start video, security, part options.
No.
Okay. Because I can see it and it's really annoying. That's the new update and I can't really delete that from here. So anyways, let's start the analysis. It's pretty obvious that what happened on the chart. Basically, these movements for the past week's movements, because price was ranging, and as I said, downside liquidity or upside liquidity will be swept. What has happened? Please just mark it on my screen. Mark the supply zone, mark the breakout structure, mark everything on my screen, please. One people and one person. Don't draw on my screen right now. Who'd like to draw on my screen? Just only one person.
Me, right here.
Who's you? Who are you?
Nawaf.
Nawab. Okay. Draw on my screen. Draw the supply zones. I'm in the most recent supply zone. Draw the breakout structures, liquidities, and what you're expecting. Just draw it, please. Yeah, perfect. What did that supply cause? I'm asking you, Nawaf. Nawaf, can you hear me?
Yeah, I can hear you.
I asked you that. What did that supply cause?
It's swapped liquidity and broke structure.
Exactly. Yeah, perfect. Swept all of the liquidity to the downside, and the sweep has happened from that supply zone. What else can we see? What can we expect?
Probably a reversal to the upside to take out this liquidity.
That could be a good scenario. Exactly. And why can we actually expect this?
Because right now supply is in control and we can see that this hasn't been broken yet.
Not
And
really.
it broke, demand has been broken. So supply is still in control.
I'm asking that why can we expect this liquidity sweep to the upside?
Oh, to get more liquidity I mean, that's what price does, doesn't it? And it's going to go up here to at least mitigate that. And then
Yeah,
continue
that could be a
down.
good option. But why are we waiting for the liquidity takeout? Because prices took out liquidity on the downside and
Because it's a range.
exactly, ranges are getting swept, right?
True.
This is a range on the downside, this is a range on the upside. Basically, this is a whole range. I don't know how retail traders call this pattern, maybe a rising wedge or falling wedge. This is a falling wedge. I don't know how you call it or how they call it. There's a liquidity on the upside. There's a liquidity on the downside. So as you can see, perfect liquidity. Downside range, downside liquidity has been swept from this candle that you just marked. It's a perfect candle. The sweep has happened from this candle. All of the liquidity have been swept. And now price is inside of a weekly demand zone right here. I will show you that demand zone too. So price has swept all of the liquidity. And if price can reverse somewhere around here, it will split the upside liquidity too, because ranges are getting swept no matter what. All of the ranges will be swept sooner or later. And the downside range has been swept. Price is collecting more liquidity from the downside. It will collect more liquidity from the upside too. And if price reverses here, I believe it won't react on this supply zone. Maybe it will react. There will be a reaction at a point, but I believe price will flip this supply zone and it will sweep the upside liquidity, and we will tap into some higher time frame supply zone somewhere around here. And if the liquidity is getting swept, or I believe if price flips this liquidity, it won't even come up to this supply zone because it's too high above this actual liquidity line. So if price flips the liquidity, it will just reverse in the middle of nowhere. And after this, I believe price will create another breakout structure to the downside. But for another breakout structure, for another continuation, to break the actual weekly low point where we are in right now, let me just show you that weekly low point. So as you can see, price is at this blue line right now. And if I go back, the only unmitigated region at this price action region, as you can see, the only unmitigated region is down here, where price is currently at. So price is reacting on a demand zone somewhere around here. Maybe there's a clean 4-hour demand zone, a clear weekly demand zone. Let me just check the weekly chart. No, on the weekly there isn't, on the daily there isn't, maybe there on a 4-hour. 4-hour is there. Okay, let me just check it. Yeah, there's a clean 4-hour demand zone. Maybe this one. Let me just extend this zone. Bear with me, please. Okay, there you go. Switch back to the 4-hour. We are on the 4-hour already. So, okay, here we are. Here we go. So, as you can see, price will mitigate this demand zone in like hours, minutes, more likely in minutes. So price is on the way down to mitigate this demand zone. This is the weekly low point. Let me just switch to the weekly chart once again. This is a weekly low point from 2000 and which was 16, 17, 2017, 16, beginning of 2017. So this demand zone has been formed 5 years ago, literally 5 years ago. And price has just mitigated this demand zone from 5 years ago. And what can we expect right here? Let me just switch back to the, no. Let me just stay on the weekly chart. Or no. Let me just switch back to the 4 hour. Sorry, so many thoughts are in my head and I don't know where to start. So what can we expect right here? If price can break below this weekly demand zone, if price can break below this actual weekly low point, where it's somewhere around here. So if it reverses on this demand zone, then I believe price will collect more liquidity from the upside. Because if price can't break below this demand zone, this weekly demand zone, with all of this amount of liquidity collected, then it will be weak. So if price reverses on this demand zone, it won't just reverse and break this zone. It will have to collect more liquidity from the upside. And where's the liquidity? The liquidity is right here. And if price collects more liquidity from the upside, and for example, taps into some sort of supply zone, for example, this one above the liquidity. So it taps this demand zone, creates a change of character, comes up to this supply, creates a change of character inside of this supply. If this scenario happens, let me just draw it with arrow movements because it's much cleaner. So if this scenario happens, so price comes up to this supply zone, creates a change of character inside of the supply zone, collects all of the liquidity, collects all of this liquidity, then I believe price will be able to break below this weekly low point. If this push can break below, this scenario only goes on, only leaves on, if the price can't break below on this current push below this weekly low point. If price reverses on the zone, then this scenario has a high chance to play out. But if price can break below this zone, so just simply breaks below the weekly low point, then I believe this supply zone will be enough to actually reverse price from here. Because this push was actually enough to break the swing low point right here. And if this push is, enough to break the weekly swing low point, then this supply zone will give reaction, I believe, and we'll see a cancellation from this supply zone. But if price breaks this zone and this supply zone can't hold price, I believe the much deeper and not deeper, upper pullback will happen to some really higher supply areas. So for example, let me just switch to the weekly chart. If price breaks this weekly low point, and if price can't reverse on that marked 4-hour supply zone and can't reverse on this 4-hour supply zone and create a new low point, then I believe that much the upper pullback will happen, because just simply that's how market works, right? Creating a low, creating a pullback, creating a low, creating a pullback, creating a low, creating a pullback. This is how a bearish structure looks like, right? Price has created a low right here. This is a low point. This is the last low point. Created a pullback, right? Creating another low point, breaking structure to the downside. Seems like it will break structure to the downside. And if the break of structure happens to the downside, we'll see a much upper pullback, some upper supply area, right? And after this, the cancellation will happen. This is how actually the market looks like. Every time frame is correlated. Every time frame is fractal. You can compare every single time frame with each other's. And basically the same movement will happen over and over again, because the weekly chart is bearish, creating bearish structure. As you can see, it's clearly bearish with even trend lines on everything. It's bearish. We can expect a new break of structure here to the downside. And if the break of structure happens, what do usually price do? Creating pullbacks. Break of structure, pullback. 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 This is how the structure looks like, right? But this is the higher time frame. And if you understand the higher time frame intention, if you understand what price is actually doing on the higher time frame, for example, the weekly, then you'll be able to combine this. Don't laugh at the chat and look at me and pay attention to me. So shut up, John. So if price breaks below this low point without any trouble, and if it can't reverse on this 4-hour zone, then the upper pullback will happen to some upper supply areas. But if price can reverse on this supply zone and create another change of character right here, then the cancellation will happen, because the structure looks like this on the 4-hour chart. And as I said, every time frame is fractal. Look at the 4-hour structure, similar to the weekly, right? Break of structure, pullback. Break of structure, pullback. Break of structure, pullback. Break of structure, pullback. Pretty similar, just like the weekly chart. Everything is correlated. Every single time frame is literally fractal. So that's why you have to understand the higher time frame narrative. And that's why you have to combine the higher time frame narrative with the lower time frame narrative. Because if you know that price will create a break of structure here on the weekly chart, then you'll know that price will create a pullback on the weekly chart too. And if the pullback happens on the weekly chart, the pullback will be bullish on the 4-hour chart, right? So this will be bullish on the 4-hour chart, creating demand zones over and over again. Does this make sense to you? Can you understand how to actually combine time frames together?
Guys, feel free to use your microphones, yes or no, or circle that.
Am I speaking too fast, guys?
No, all clear.
Clear? Okay.
I have one question because it's my first day after joining. How can I draw on your trading view page?
I don't know.
Hey man, on the top of the Zoom, you can see view options. Yeah,
Okay.
view options, annotate,
Oh, this is
annotate, and that's
no,
the
no,
driving
no.
tool.
No, you just took over control of my screen.
No request remote, but annotate, and there's the driving tool.
Okay. Okay. Thank you.
You're welcome.
Okay, so let me just continue. Perfect. Are you guys here? Everyone's here listening?
Yes. Yes.
Yes, Marcel.
Yes.
Yes.
Yeah.
Please, guys, don't request remote controls because it just annoys me. So as you can see, it happened pretty quick. The demand has been tapped. So price is inside of the demand zone. What can we do right here? Price is inside of a, I don't know, that was a 4-hour zone, right? This is a, yeah, this is a 4-hour zone. So price is inside of a 4-hour zone. We have to wait for a 15-minute change of character at least to go along. But considering that price is actually, just look at this, insanely bearish, just fucking bearish. Sorry for my language, but it's fucking bearish. So anyone who goes long, anyone who opens a long position right here, it's just nuts. It's just crazy, right? Just look at this bearish pressure. If you think that you can fight against this order flow with, for example, a 1-minute change of character right here, you're crazy. You can't fight against this order flow. That's why I always say to trade with the order flow, not against the order flow. And we need at least a strong change of character on the 15-minute chart. Exactly. We need a strong change of character, or even this high to be broken to actually go long, because there's more like a higher chance that price will reverse from here and doesn't create a pullback and give you an opportunity, just create a pullback to some higher supply area for like this, and it will continue the movement to the downside. Because I believe this is the 4-hour supply zone. Let me just check it. No, it's a bit above, but something like that. So yeah, I believe it has a higher chance the price actually create an upside movement, create a change of character right here and continue the short movements, than just give you a long opportunity right here with this movement. So I believe the short movement will happen sooner than giving you a long opportunity, and taking any long opportunities right here at this region. So after the mitigation of this demand zone, even though there's a good reaction, as you can see, price has tapped this demand zone, and there's a strong reaction because price has created this literal reaction all week. Price has tapped into this demand zone and immediate reaction. Even though price has created this, it will be still risky to go along because the bearish pressure is insanely high. It's insanely strong. But if there will be a change of character on the 15-minute chart, and for example, a good entry right here in a 1-minute chart, and all the fractal confirmations are happening, then you can go long. But it depends on your own risk tolerance. It depends on your own trading plan. If your plan tells you to not go long because I'm looking for short opportunities mainly, then just go short. Then just skip long trades. And if there will be no opportunities today or tomorrow, just keep trading. You don't have to trade but every single day. If your plan tells you to wait for the short trades and not long trades, then just wait for the short trades and skip trading. If you're seeing a long opportunity, skip it. If you're seeing any long continuation, skip it. If your plan tells you to take short trades, take it. That's all. Basically, you have to create a plan. That's why you have to create a plan. Because there's right here at this region on the 15-minute chart, and only on this slide, we have several scenarios. We have several scenarios. For example, there's this less recent 50-minute demand zone, not demand, sorry, but this supply zone. There's this less recent 50-minute supply zone. If price can come up to this supply zone, and is this in yeah, it's in lunchtime, doesn't matter. If price comes up to this supply zone, and for example, creates a change of character on this zone, then you will be able to ride the short continuations, for example, the 50% of this 4-hour zone, because we can expect a 50% mitigation at least. So if the continuation happens right here, confirmation with for short, then I will ride the expectation order flow to the downside because I'm aiming for shorts in this extremely short trend. Going long in this trend is literally like suicide. So if this happens, so for example, price creates a change of character right here, I will go short. Second scenario, if price breaks above this supply zone and taps the next recent supply zone, which is right here, and creates a change of character on this supply zone, or let me just mark the expectation order flow, and creates a change of character on this supply zone, then I will go short from this supply zone because my plan tells me to go short. I will go short from this supply zone, and I won't look for the flip entries right here. If price flips this demand zone, I mean supply zone right here with this movement, I won't look for demand continuations right here after this supply zone because that's extremely counter trend. Maybe if there will be a really fucking high criteria entry, I will be entering somewhere around here between these two supply zones. I said maybe. With the maximum highest criteria, I will be entering because I'm actually, I don't know how many percentage I'm up in this month, maybe like 32% up in this month. So I can freely take trades. I can freely risk my capital because I've already gained 32% in this month. So maybe if there will be good fucking criteria, I will go along. But mainly I'm aiming for shorts, for example, on this supply zone, for example, on this supply zone, for example, on this 4-hour supply zone, I'll be aiming for shorts. The only scenario I will be strongly looking for buys. So strongly means I'll be looking for buys mainly if this high point breaks. If price breaks above this high point right here, I'll be looking for buys. If this high point breaks, I'll be looking for buy opportunities with some character change movement on some deeper demand area, and I'll be looking for buys after this supply zone. But if price steps this supply zone without giving me any long opportunity, so just simply taps it, I'll be looking for a change of character, 15-minute change of character and continuation to the downside. That's all. Once again, I'll be mainly aiming for shorts. Aiming for shorts. So basically, that's all about the 15-minute chart. Let me just drink a sip.
Marcel,
Yeah.
if you're looking for the short from that 15 minutes supply zone, are you looking at a change of character in 1 minute?
Of course I do. That's how we
Okay.
trade. We always wait for confirmation on the 1-minute chart, right? If there's a 15-minute zone, you always wait for confirmation on the 1-minute chart.
Okay, cool. Thanks.
Who did this?
Marcel, may I please ask something in terms of this demand zone, this one? The thing you said it has to create, okay, I see there's liquidity here, but then I don't know which structure it broke.
What do you mean? What's the question here exactly?
I'm asking about the supply zone. Like what makes it a supply zone? Because you said it has to break structure.
It broke structure. Just look at this. Prices coming down, prices coming up, creating a pullback. And from this supply zone, prices created the less recent inefficient movement. This is an inefficient candle, as you can see. There's inefficiency between this and this. And also it broke structure right here. There's a break of structure. This was a pullback, and the break of structure has happened from this candle. Also, there's liquidity for this candle. So this is a supply zone. And why are we using the wick instead of the less recent candle? Because the wick is above the less recent candle's high point, meaning there are no orders on this candle, but the orders are on the wick.
Oh, okay. Thank you.
You're welcome. So yeah, that's all about the 15-minute chart. But it's like, guys, looking at this is easy, right? Basically, there's no literally much of a scenarios today because price is bearish. Price is mainly bearish. We are mainly looking for short opportunities. So basically, all we have to care about is this lag, nothing more. Because today was basically like a strong bearish pressure. Today was just a strong bearish pressure. That's all. And we will be looking for short opportunities on these marked supply zones. And if the change of character happens to the upside, which won't, I believe it won't happen in this session. If the change of character happens to the upside, we'll be looking for longs up to this supply zone. And if this supply tap happens, we'll be looking for shorts down to another break of structure to the downside. Basically, that's our plan. It's not hard, right? It's a pretty easy plan compared to other days. So let me just switch to the 5-minute chart. Here you will see it much better. I will refine this zone for this supply zone. Here you can see it much cleaner, as you can see. Price was coming down, creating this pullback, creating this liquidity. There's liquidity, and from this supply zone, prices created a break of structure here to the downside because that was the last recent low point. Let me just mark this structure out. Sorry, remove this. This was the high point, low point, pullback. This high didn't break structure to the downside, so this isn't a high point. This is just a weak high point. So this is substructure, 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 real high point that has caused less recent low break. So this is the high point that has caused the less recent low break right here to the downside. So this will be our new high. This is our new low, substructure, 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 new high point, because this new high point caused the less recent low break, right? And this is our low point because the pullback has happened, pullback has started. Do you understand this structure?
Yes, I understand. When I see it on
Yes.
5 minutes, it makes, I didn't see the pullback properly on the 15-minute. I just saw weeks. I didn't understand.
Yeah, no
Okay,
worries. Just switch to the 5-minute chart if it's not clear, because you can say the exact same thing on the 15-minute chart, just like on the 5-minute chart, but the 5-minute chart will be with more candles, of course. And the pullback will be much cleaner on the 5-minute chart, and it will be harder to recognize on the 15-minute chart, because on the 15-minute chart, it just looks like a little stop in the market, right? Not just a pullback. On the 5-minute chart, it's a clear pullback with a clear structure.
Yeah, that's the structure I was used to.
Yeah, perfect. Okay.
Hi, Marcel.
Hey, ma'am. What's up?
Yes, brother. Fine, brother. I hope you are fine.
Yeah,
I
thank
just
you.
dropped a picture of that's written a question in the chat box. Can you see it, please?
I will answer this after the session, okay?
Okay, brother. God bless you.
Thank you. So, okay. Just forward it to me in DM and I will answer it, but not in the live session because we have to move on. So 5 minutes is exactly the same as the 15-minute chart. The only difference is that you have to refine the candles, but the 5 minutes is exactly the same. Maybe I will refine this candle for this. It's not even a refinement. It's actually a bigger zone, but I will use a bigger zone. So what else can we see on the 5-minute chart? We can see this. Also, let me just switch to the 15-minute and just send you the pullbacks. Not me. Why did I say pullbacks? Send you the markups. Yeah, this is the first. Please mute yourselves, or I will mute you all. This is the first scenario. This is the second scenario when price just seems like it's breaking the low point without any pullback. And this is the third scenario. Yeah, this will be the first markup because I want to send you the markups. On the 15-minute chart, okay. You will understand this because we talked about it in the session. So you just have to take a look at the markups and copy my chart. And it seems like it will be broken or the liquidity will be swept. So the 5-minute chart is exactly the same as the 15-minute chart was. All we have to do right here is to wait for the same scenarios, just like I said. And I believe this has a higher chance to play out because there's liquidity. If price establishes zone, I believe price will go up to the zone and sweep the liquidity and reverse right here. And it will continue the downside movement. So this is one possible scenario for today. And if this happens, then we'll be able to go short. I will only send you this scenario because we talked about the other scenarios and I don't want to repeat myself in the markups too. This is the first scenario and price didn't break the zone, but mitigated the whole zone, as you can see. So if price reacts on this zone, reacts on this 15-minute zone, then we'll see a reversal and break of structure, not just deeper mitigation. So if price reacts on this zone, I believe we will see a break of structure to the downside. This is the first scenario. And basically on the 1 minute chart, you can do shit. I really, really recommend you to don't take a look at the 1 minute chart at this session. I mean, as soon as price taps the 15-minute zone or breaks this zone, you can take a look at the 1 minute chart, but it's pointless because price is inside of a 4-hour zone. And if there will be a 1 minute change of character to the upside, so for example, like this random 1 minute change of character, you can't go along because you'll be fagged. You'll be literally freaked, fagged. I don't know how to say this. I don't want to swear, but you'll be fagged if you go after this bearish pressure with 1 minute change of character. So I really, really recommend you not to look at the 1 minute chart. Just stay on the 5 minute chart and the 15 minute chart and wait for a clear zone tap. Wait for a clear zone cam formation. That's all. Basically, that's all. You don't have to do anything in this session. It will be a chilly session. We will be just chilling, wait for price to tap any zone. And if the zone tap happens, we'll act. But the meanwhile, in this region, we don't want to trade shit because this is risky. This is risky after this bearish pressure. Taking any long trade in this scenario with a 1 minute change of character is risky as fuck. You don't want to take risk trades because look at this bearish pressure. Just wait for a tap of this zone, wait for a tap of this zone, wait for a change of character right here, or wait for a tap of this zone, or wait for a break of this zone. And if the break of this zone happens, you'll be able to wait for a confirmation once again. And if the break of this zone happens, I will send you the markup updates. But yeah, that's all you have to do in this session. Basically, just wait for a clear confirmation.
Hi, Marcel. Could you show us the demand? Did you already refine it or?
This one right here.
Okay.
That's where price
so
is.
you would not consider the whole
yeah, I do, but this is the 4-hour refinement. Basically, this is a whole weekly demand level right here. This whole level is a weekly demand level. So I will just mark it right here that this is a weekly low point. If price breaks below this blue line, that will be a weekly break of structure to the downside. But as soon as this demand holds, there won't be a break of structure. But I believe this demand breaks, there will be a break of structure to the downside. But this is really unpredictable because price is creating just crazy movements and we can't really predict anything right here. So we have to react on the 5 minute chart and 15 minute chart.
Okay,
so yeah, basically,
thank you.
You're welcome. It's really, really unreadable. It's unreadable because it's unpredictable also. So yeah, it will be a waiting session. All you have to do is wait in this session. Patience, exactly. News after 30 minutes after. Yeah, there will be news too.
So we are in late zone, we're going to be waiting for a 15-minute change of character.
Mate, I can't hear you. Sorry, your microphone is a bit bad.
Okay, hello, can you hear me?
Yeah, I can hear you now.
Yeah, so I'm saying basically in that 4-hour demand zone, we'll be waiting for a 15-minute change of character. Then we go to the 1 minute chart.
Yeah, exactly.
Okay.
Correct. Okay, guys, that's it for the session, for today's session, because there's nothing more to talk about and session opens in 5 minutes. I mean, New York session opens in 5 minutes. So yeah, I send markup updates if anything relevant happens. But basically, this whole session, this whole New Year session will be about the 15-minute/5 minute zones. And we won't be able to trade on the 1 minute chart. And not just like we won't be able to trade on the 1 minute chart, it's risky to trade on the 1 minute chart right now without any higher time frame tap because you don't want to risk your capital. Just look at price action, it's creating crazy movements. Just leave it and give it time to recover. And if you give it time to recover, you will be able to find good opportunities after price has stabilized. But right now, it's just crazy. All we need to do is come with John to stream the. Yeah, it's actually fucking crazy that €1 is almost $1. Like, what the fuck? It's like unbelievable. It has happened in 2003, maybe. Let me just check it. So literal one was in 2002. Yeah. Last time it was at this low, it was in 2002, 20 years ago. Like, what the fuck? Euro's literally dying. Okay, guys. So that's it for this session. Thank you for being here.
Master, can Hi, Marcel. Can you just summarize answer the question I posted in the Zoom
Yeah, send it
chat
on my
section
Discord.
on Discord?
Yeah, I will answer it there.
Yeah, I just wanted if you can explain on the board your screen, if possible.
Right now the session opens, and sorry, we have to move on. I will explain it in DM, okay?
Okay, brother. Thank you.
You're welcome. So yeah, thank you guys for being here. I wish you guys a beautiful day. Thank you for listening to this session, and thank you for being part of this community, and thank you for being awesome. I can't say any other words. Love you guys.
Thank you.
Wish you guys a beautiful and profitable day.
Thank you guys for being here. Take care, protect your capital. Don't chase longs, don't chase counter trend. Just chill and be patient.
Thank you.